Hey everyone, welcome back to G2's weekly market update, where we break down the top global market stories and what they mean for investors like you. Let's jump right in. Starting with the United States. Markets continued their rally last week with the S&P 500 and Nasdaq climbing to fresh record highs for the second week in a row. The Dow rose 1.26% and both S&P Midcap 400 and Russell 2000 gained over 0.9%. One of the key drivers? Trade optimism. The US reached new deals with Japan, Indonesia, and the Philippines, and talks with the Europe are heating up ahead of an August 1 deadline when the US is set to impose 30% tariffs on European goods if no agreement is reached. We also had mixed corporate earnings. Alphabet impressed with strong results and AI driven momentum, gaining over 4%, while Tesla disappointed, falling 4% on weaker than expected numbers. In economic data, services continue to lead. The July flash PMI showed overall business activity accelerating, with the composite reading hitting a 7-month high of 54.6, all thanks to the services sector. On the flip side, manufacturing slipped back into contraction, dropping to 49.5. On housing, it is still a tough market. Existing home sales fell 2.7% even as prices hit a new record of $4,35,300. Mortgage rates remain elevated, keeping many buyers on the sidelines. In credit markets, treasuries ended the week slightly positive as yield eased. Investment grade bonds saw tighter spreads and strong demand, while the bank loan market had its fourth largest new issue day in history, most of which were repricings, not new money deals. Over to Europe. The Stoxx Europe 600 index rose 0.54%, driven by cautious optimism over US Europe trade talks. But the Europe made it clear if no deal is reached, counter tariffs are coming. The ECB kept rates on hold at 2%, no surprise there. President Lagarde struck a slightly hawkish tone, emphasizing a wait and watch stance. Inflation's now at target, but risks from global trade tensions are keeping policymakers on edge. On the data front, business activity in the Eurozone picked up with the composite PMI rising to 51. Confidence rose in Germany but dipped in France. In the UK, data was more muted. Retail sales grew just 0.9% below expectations and the composite PMI slipped to 51.0. Employment indicators softened, suggesting a cooling labor market. Japan had a stellar week. The Nikkei 225 and Topix each surged over 4% following the announcement of a trade deal with the US, one that kept most tariffs at 15%, down from the threatened 25%. In return, Japan pledged to invest $550 billion in US industries and open its market to more American goods. Despite the good news, political uncertainty looms. The ruling coalition lost its majority in the upper house, sparking speculation about PM Ishiba's future, though he has denied plans to resign. Economically, the inflation picture is cooling slightly. Tokyo area CPI rose 2.9%, just below expectations, but inflation still above the Bank of Japan's 2% target and tariffs risks easing. Markets are once again pricing in a potential rate hike later this year. Flash PMI data showed solid growth in services, while manufacturing contracted sharply due to earlier tariff concerns. And finally, China. Mainland markets rose on signs that the tariff truce with United States could be extended. The CSI 300 and Shanghai Composite both gained over 1.6%, and Hong Kong's Hang Seng jumped 2.27%. The next round of US-China trade talks is set to happen this week in Stockholm, following earlier rounds in Geneva and London that pushed tariffs and eased export restrictions. Markets are watching closely, especially after the 145% tariff shock in April. For now, the mood has improved, but the situation remains fragile. G2 takeaway. Markets are clearly buoyed by trade optimism, not just between the US and China, but across Asia and Europe too. But underneath the surface, we are seeing divergence. Services are strong, manufacturing is weakening, and the housing in the US remains under pressure. The next few weeks will be critical, especially with the August 1 tariff deadline, evolving central bank guidance, and the pace of corporate earnings. That's your G2 weekly market update. If you found this helpful, do not forget to follow us for more insights and tell us what's the one thing you are watching this week. Thanks for tuning in. We'll see you next Sunday.